Hello and welcome to another episode of The Express Economist. And this is a very, very special episode. I have with me Dr. C. Rangarajan, former RBI Governor, and he's also been the chairman of the Finance Commission in the past. He served as the governor in states. And I'm very, very grateful, Dr. Rangarajan, that you have agreed to spare some time.
Okay, thank you. Right.
As many of you might have known, or what you should know is that Dr. Rangarajan has just come out with his latest book. It's called Forks in the Road: My Days at RBI and Beyond. And it's a fantastic read for anybody who wants to understand, how various things happened in India's economic history. Primarily because Dr. Rangarajan was at the heart of many of these massive changes that India has seen in the past roughly 40, 50 years. And I wanted to talk to him about some of the things that he's mentioned in the book and some of the questions that we all deal with in our daily life, the stories that sort of dominate. And it would be great to hear from him what he made of some of those issues that dominate. So without any delay, let me start with the first one. And this is not in any particular order, but exchange rate is something that dominates news a lot. And there's a lot of newsprint and TV time devoted to rupees exchange rate with dollar. And it is not very clear, even from my own perspective, whether a strong rupee or a weak rupee is good for India. There can be arguments both ways, and also whether RBI should be intervening or not. So my first question is that when you look at all this debate about rupee and the exchange rate, what do you make of it? Is this a weakening rupee necessarily a bad thing for India, or a stronger rupee necessarily a good thing for India? How do you sort of look at this thing? If you could explain to our readers.
First of all, we need to understand a little bit about how the value of the rupee is determined. Several decades ago, there was one theory, which was called the purchasing power parity theory, which explained how the value of any currency is determined. The idea was that the external value of a currency is determined by its internal value, meaning thereby that the rate differential between one currency and another currency depends upon the difference in the inflation in the two countries. That is the purchasing power parity theory. That was a time when the balance of payments of a country was dominated by what we call the current account, that is, export and import of goods and services. But over time, this has changed. An important element now is a capital account in the balance of payments, which means the inflow and outflow of funds. The value of a currency can be strong despite the fact it has a high current account deficit, because there was enough capital flowing from outside into the country. Therefore, the supply of the foreign currency increases, not because of the imports that we make from that country, but because of the decision to invest, or because the decision to keep deposits in our country. In some sense, what has happened in the Indian situation is, and it is true of many other countries also, is that the main reason for the rupee depreciating in its value, let's say against the dollar, is because the funds inflow into our country started diminishing. That is because with a view to control inflation, the Fed in the United States really raised the rate of interest. Therefore, on the funds, the investors find United States itself is attractive because of the higher rate of interest. Therefore, instead of sending funds outside, they are keeping the funds inside. And sometimes, as it has happened in the present case, they withdrew the funds from India and put it in the United States. Therefore, the reason why that there is a sudden decline in the value of the rupee is because of the capital account, because of the outflow of funds and the lack of funds coming from outside. There are various forms through which the funds flow. But generally speaking, when the investment becomes more attractive domestically, then the foreign countries do not send funds into other countries. This is precisely what has happened, because the fluctuation in the value of the rupee was quite sudden. That is, on the question that you raised about whether it is good or bad for the value of the currency to be high or low. In a sense, the undervalued currency is better because it is more attractive for exports. But at the same time, we have to understand that this cannot go on. I mean, at some particular point, in terms of the situation that existed at that time, one might want to devalue the currency. In those days, that was what was done. But this cannot be a continuous process. Please remember, immediately after the IMF was formed, the rupee, the dollar was equal to 4.75 rupees. And today we are talking in terms of 80 rupees to the dollar or a little more and so on. So I would say whether in a particular point in time, the devaluation or the depreciation in the value of the domestic currency, which is rupee in our case, may be advantageous because we have a tough balance of payment situation. We need to export more and reduce the current account deficit, then it may be useful. But this cannot go on continuously. I mean, that I think is the distinction that we have to make. At certain points in time, devaluation or the depreciation of the domestic currency may be advantageous. But it cannot be a continuous story because ultimately what we are essentially saying is that for getting $1, the amount of energy, the resources that you need in India is becoming higher and higher. I mean, I think that is, therefore, the steady deterioration in the value of the rupee is not something that one would advocate. But that is where the whole purchasing power theory comes. So long as the inflation in our country is higher than the inflation in the other countries, then the value of the rupee will depreciate. Therefore, when people talk about what needs to be done and all that, I have always taken the position that we must reduce our inflation rate. And therefore, the attempt to keep the value of the rupee at a reasonable level, that is difficult to define, but one can understand there is some level at which it is appropriate. Then, in which case, we should really try and see that the inflation in our country may be higher, but must be slightly higher. For example, US talks of 2% as the inflation, appropriate inflation, whereas we talk of 4% as the appropriate inflation, even though our actual inflation may be higher, but at least the goal is 4%. Therefore, if you have this, then every year you will have to see that the value of the rupee will have to depreciate. Therefore, the point really is that the current situation has been aggravated because of the capital flows. It is not, I mean, the current account deficit this year will be higher than what it was before. But that by itself will not justify a sudden drop in the value of the currency. The sudden drop is justified or not justified. The sudden drop is triggered by the behavior of the capital flows. But over a period of time, as I said, we really need to see that our inflation may not necessarily be equal to what their inflation is, but at least close to it. And the margin is not that high.
Okay. So, what I understood is that, we must at some point in our economic movement reach a point of some kind of a stability vis-a-vis the dollar in terms of exchange rate. It cannot be this continuous process. Yes. But what you mentioned about the inflation control, and that was my next question about, that there's this, and we are seeing that from the monetary policy statements that we hear and the minutes that we read, that there is a increasing divergence about what the RBI needs to do to control inflation domestically and what the RBI might have to do to sort of support rupee in terms of the aggressive hikes that are happening in US. So, if you could just quickly also give me an understanding that should the RBI then just look at domestic inflation or try to raise interest rates or do anything to support rupee exchange rate, or should it focus only on domestic inflation?
No, the point is that the kind of conflict that you talk about does not actually exist. I would say, for example, even in India, the inflation is at a higher level. I mean, we had set a limit of 6% as the upper limit in the inflation targeting scheme, but we have been above 6% for almost 9 months.
True.
Therefore, we also need to control inflation. Therefore, in some sense, raising the rate of interest is serving two purposes. It moderates inflation to the extent to which, let us say, the rise in the interest rate has an effect on the price level. That's happened. But at the same time, it does have an effect in terms of the value of the rupee also. True. Therefore, I don't see that conflict at the moment. But the question that will arise is, to what extent? I do not think that India can say that we will not raise the rate of interest. I think that is ruled out, in my opinion. I think we need to raise the rate of interest, even if the external situation has been different. But given the external situation, I think we cannot let the rupee depreciate further and further at this point. Therefore, in some sense, at this particular moment, we need to raise the rate of interest. The critical question is, as you also mentioned, by how much? They do it at big jumps of 75 basis points at a time. We have done so far by 50 basis points. Perhaps I don't know what the Monetary Policy Committee will now do, but we can't be too soft on that. I mean, I think we really have a problem. We also have a high inflation. We need to bring it down. And the question also implies that whether there is trade-off between growth and inflation also. That's also leave aside the external value of the rupee. Therefore, people will say, even though we are about 6% inflation for 9 months, should we really act strongly because that might affect the growth prospects? But let us understand what inflation targeting essentially meant.
Yeah, I wanted to ask a very specific questions on inflation targeting, because ever since this has come about, 2016 onwards, there's been a massive debate about whether India should at all be having this inflation targeting regime. There is a whole body of work now which is arguing that this is a model ill-suited for India. and that this is the wrong way to go about conducting our monetary policy. You worked in the previous regime where you did not specifically target one particular rate. So how do you sort of look at this in the emerging scenario? How do you see?
No, I want to correct you.
Yeah.
I have always taken the view that this one of the primary functions of the central bank is to control inflation. There are many stakeholders for growth. Government wants growth. Politicians want growth. Now, they do not understand sometimes that in this process, inflation also can go up. It has happened in India's history. I mean, you just look back. There are many periods or many years in which the inflation has gone up. Therefore, the idea that that we can have the best of both worlds is not true. Therefore, the necessity to control inflation is very much there. So that is why, and I have written, actually, you can see in the book also, that I had suggested in my time, in 1996 or something, a proposal to have a formal system of inflation targeting. But there I had said, we need to have some consensus on what the acceptable level of inflation is. That is where the real issue comes. That the US and the European Union wants only 2%. And they did. I mean, actually, in the United States, for a long time, 1% inflation was the accepted thing. After the 1980s, when there was heavy inflation, big inflation, and they came back to this. And in fact, once again, even in India, after 2016, after the introduction, for many years, the inflation was low in India. Therefore, the question of having a low inflation is very important. Therefore, we adopted a very unique system. We did not say 4%. We said the target is 4% plus or minus 2%. Why? We thought that it may not be possible to hold strictly to 4%. Therefore, there may be occasions when it will go up. So you don't have to immediately do everything. And if you think that that's a temporary blip, then it will come down. Therefore, we gave a fairly big margin. 4% is the central point, but we gave another 2% over. Therefore, in my opinion, the inflation targeting mechanism that we have it's a flexible mechanism. It is taking into account the features of our own economy, because we are subject to supply shocks more than other countries. Supply shocks, particularly in agriculture. Bad monsoon can result in the food grain output going down and so on. Therefore, my point is that once you cross 6%, then this argument doesn't arise. Before you go cross 6%, yes, you can say, all right, let's have focus more on growth rather than inflation. But once you cross 6%, then there is a need to really focus more on control of inflation.
Okay. The valid point. But one query that I had in my mind about this this framework, where in India we always talk about growth versus inflation, and if one listens to say the Fed chair or how the US Fed functions, they always the framework is between unemployment or employment numbers and inflation. It's not about a particular level of GDP. It's about how many people are employed or what is the unemployment level. So why is there, why don't we talk about employment in the Indian setting in terms of monetary policy setting? Is there any particular reason why we always talk about growth versus inflation?
Well, even in the US, They also talk about growth. I think it is the famous Phillips curve about which we talked about. It's all uh, linked to unemployment. But the unemployment is very closely linked to the growth performance. I don't think you can increase unemployment. I'm sorry, increase employment, even though growth is not happening. I think this is a misconceived notion.
But the reverse can happen, sir. Is that, I mean, because India has had that experience that growth can happen without as many jobs being created.
Well,
is
the point really is that what is the nature of growth? And therefore, to some extent, we can adjust. But over a long period or over a medium period, employment cannot increase unless there is growth in the system. Therefore, the idea, therefore, that we can have a high level of employment without the economy growing is simply not correct, because the technology is all moving in one direction. It's all right. We might have more employment because of use of a lower type of technology, not a very intensive capital technology. It happened in India's case with respect to production of handlooms, production through handlooms, and production in the mill. And the more you give support to handlooms, you may have more employment, but that doesn't mean that the productivity in the system has increased. Therefore, we need to understand that. I think just take, for example, the rural employment guarantee scheme. We call it employment.
Yeah.
Sometimes we don't include them under employment.
Yeah.
Because it is only for 100 days and a certain amount. But now it is also equal to the minimum wages.
Yeah.
Therefore, it is there. Therefore, that kind of employment is also employment. But whether that is a proper employment, one doesn't know. Therefore, I personally think that there are problems of a conflict between employment and growth. This was the whole issue when Industrial Revolution happened. But what happened was that the production increased at such a fast rate that those who were thrown out of employment could be employed again. I think that is the route that we have to follow. I think the idea that somehow employment can be increased without a proper industrial system and without a proper growth rate is not, in my opinion, a correct word.
So very, very, very interesting point you made. Because there are two. One is the one question that I have immediately in my mind is that, is there a particular growth rate which you think India must have for that whole process to happen, that some are thrown off the cycle, but then because the growth is so virtuous and so substantive that it will bring people back? So is there a number that you sort of work with?
Now, we have worked with this number from various angles. One is really that our per capita income today is something like $1,900. People talk about India becoming a developed economy. To become a developed economy, the per capita income has to go to $13,000. Then only we can become a developed country. All right. If our goal is by the next 25 years, that is when India completes 100 years of independence, we should be there. Then calculations show that we will have to grow between 7 to 8% continuously over this period. I tell you that between 2004-5, exactly 5-6, let's say 2005-6, to 2011-12, Indian economy, according to the earlier 2004-5 base, grew by between 8 to 9%. Between 2005-6 and 2007-8, the average growth rate was 9% plus. That is a time at which we were all talking as if that we will eradicate employment. But since then, that growth rate has fallen. I wish to convey through your program that let us not talk as if that we can generate more employment by just doling out employment. This is not sustainable. Social safety nets should be there because there is a transition period in which, but we cannot have rural employment guarantee scheme fulfilling this, because that is why we are saying 100 days, because we can't say 365 days.
And we're now talking about urban. In fact, some states have already started
Yes,
urban.
yes. I recommended it for the Tamil Nadu government in my report, and they have also introduced. But these are all transition arrangements, because until the growth rate picks up, we have to do it. So the point really is that we really need to grow fast. Now, there is a big problem that we are all facing, not only we in underdeveloped or developing economies, but also in developed countries. The problem that the developed countries face is the introduction of the new technology, which are artificial intelligence and so on and so forth. It is providing employment at a high level of emoluments to a limited number of people. That is going to become a serious problem. With the coming of the artificial intelligence, it is not the manual labor that is being substituted. It is the mental labor which is being substituted. Therefore, the Western countries are really trying to see how to deal with the problem. Belgium is moving into a 4-day week because they think that with this support, even 4 days a week will be enough to produce the output that you need. Therefore, that is a problem they are facing. And so long as we want to compete with them in the global system, we cannot avoid using those technologies. That is, then we will be pushed back. Therefore, if that comes, our problems going to get compounded.
You've hit the nail on the head, because there's again another debate that many of the viewers might know, is that whether India follows the growth model, which is labor intensive, which involves a lot of labor or not. And some of the academics very strongly argue that India should approach its growth process in such a manner that it involves a lot more people, and that increases employment and overall prosperity. If we follow a very capital intensive model, then we might just compound our problems. Now, how do you sort of look at that debate?
I don't think this choice is open to us.
Okay.
Because today, why are we saying that we are leaders in computer technology? Because we had skilled people. Somehow these institutions like the IITs came into existence at one point in time. Therefore, we have been able to do that. Because otherwise, then you will get into a global trading system, which is a closed one. We have experimented with that. I think that is not going to be the way that we can really make it. But wherever there is a choice that is possible, I think we should do it. After all, in the service industry, purely in terms of service being the final good, not service being an intermediate good, there are possibilities. After all, in the hotel industry, hospitality industry, there is still a need for people to be employed. Therefore, we will have to look at the choice that we have. But to say as if that you can produce steel with some backward method is not possible. You remember in China, they tried to do steel in every backyard. It collapsed. It could not. Therefore, unless you produce steel, you cannot produce also the tools and other things that are there. Therefore, I think we recognize the complexity of the problem. We recognize that there is a huge manpower available, but at the same time, the new technologies that are coming up are increasingly labor saving. We have to marry this somehow and identify industries in which more labor can be used without sacrificing productivity. That is where I say hospitality and other industries come.
It's very tempting to ask you, do we need another structure to what you're articulating? Do we need a policy structure to do this, or do we already have that framework? How do you sort of see that?
I think it is evolving. I mean, it is not as if that you can impose something on this. No, because the nature of the hospitality or the hotel industry is such that more people are needed. I think per rupee of output, more labor is used there than in other industries. But I think there may be possibilities of scientists in India also finding out areas in which there is some possibility of the techniques of production, as we used to call it in those days, can change. And there can be a little more labor intensive.
Okay. Now, I was going to ask you something about poverty, but I will flip it and first ask you about the government's role, because we are absolutely at the brink of that particular question. Because there's massive debate across the world, from UK to US and even in India, about the role of government. And you mentioned this in the book, where you basically said that, often we think that less government would maybe mean more market, or that kind of very simplistic deduction is misleading. So I want to understand from you, across the world, we are seeing, especially in the developed countries like UK or US, we are seeing with the crisis happening, governments coming back. You have a conservative government in UK now saying we'll give price caps, and behaving exactly like an Indian government might have reacted to a crisis like this, saying we'll give price caps. And in the US also, we've seen President Biden saying trickle down doesn't work, and we need to build it up from ground up, and more government involvement in many of these things. So this whole debate, and a lot of people say that the whole neoliberal order has been debunked, and how do you see the role of market and government, especially in the Indian context? Do we need more government to create maybe more jobs in the public sector? Why not have more people in the public sector to do many of the things that we need to do properly? Or do we need less government? How do you sort of see this thing?
I have written about it also.
Sorry, it's a big question.
I have written about it many times on this, but let me say, we need to make a distinction between the role of government in a crisis situation and the role of government in normal secular period. Much of what Keynes wrote was actually the crisis situation, when he argued for increase in investment, when the economy is not functioning to full capacity.
Counter-cyclicality.
Yeah, so counter-cyclicality, and not only counter-cyclicality, but also because of a variety of factors, the output has been fallen. Therefore, in that situation, the intervention of the government, the UK government, about what it is talking about, or what we were also talking about some time ago, is important. But that is essentially to push the economy forward. That role everybody recognizes. But the role that people are talking about is whether the government should set up steel mills. Because much of the investment activity that is undertaken by the government in a crisis situation is of a different nature. Therefore, the idea of setting up steel mills or um, companies to manufacture something, machinery, and so on. That is where the distinction comes. We thought in our country, in the early period, that the role of the government is not just restricted to some small area, but the area of the government involves in getting occupied with a very large number of sectors. And we actually thought even in terms of arguing that industrialization with an emphasis on heavy industry. So that was the argument that we used to make. So that is the issue that is relevant. That I think is that on that, the developed countries are not going back. They are not. The developed countries do say that in times of crisis, in terms of letting the economy lifted up during a difficult period, the role of the government is there. But in terms of denationalizing and all that, that's another set of issues. They are not talking today about taking some of the industries which were privatized should come back to the government. I think that is not being argued. But what I say is that whatever might have been the justification in India also, in the decades immediately after independence, now the private sector is well established, and they are in a position to be able to produce many goods. And therefore, so long as market can function and can deliver goods, I think it should be left to the market, left to the private enterprise. Okay. There may always be some situation in which maybe the government needs to intervene, even in those areas. Not very clear. For example, manufacture of chips, which we are talking about. Yeah. We are not now thinking that the private sector can do that. If it is not able to do it, whether the government will have to come in and do it is something that one has to think about. But the growth of the private sector now is at a level where it has the ability to produce those things. Therefore, where markets can function, where goods can be produced by the market, and where those markets can also be regulated by the government, then the private enterprise should do it. Okay. But then where is the big question about more market does not mean less government? It's really first in the social infrastructure. There are private hospitals. Corporate hospitals have become the order of the day, but they all cater to one set of clientele. We do know that there are very large number of people in the country who cannot just afford to go to these corporate hospitals. Therefore, in the realm of social infrastructure, hospital is the only one, but there are others, whether it is sanitation or whether it is water supply or something. And as the per capita income level goes up, probably the demand for all of these commodities also increase. And therefore, in the field of social infrastructure, the government has still a big role to play. We can, of course, even in social infrastructure and more particularly physical infrastructure, there could be a combination, what we also call the public-private partnership, and do it. Therefore, there is no clear line to be drawn and say that there is no role for public sector or there is no role for private sector. But we certainly, after reforms, have widened the scope of the private sector. After all, there were some areas which were not open to the private sector at all. Now we don't do that. Even where you think that the government has to play a role, allow the private sector also, if it can do it. After all, only a few days ago, we talked of a private satellite going up or something like that. So it is possible to do things. But the big role that they will have to play is social infrastructure,
Right.
whether it is schools or whether it is colleges or hospitals, all water supply, and many other things that we can talk about. And perhaps even in the area of environmental control or something, there may be a bigger role for the government also. Therefore, I do not see a clear-cut line being drawn that there is only private sector and there is no public sector. But I identify particularly the area of social infrastructure and the physical infrastructure also to be the area in which the government should be moving more strongly in a developing country like ours.
And that brings me to the question about poverty estimates, because that's another area where government's involvement is huge in trying to alleviate poverty. And in India, we have a massive debate around poverty, primarily perhaps triggered by the fact that we don't have as much data around poverty estimation. We had the Tendulkar poverty line, and then we had your poverty line, which you sort of raised it a bit and gave those numbers for poverty. But since roughly 2013-14, we've not had any update on India's formal official poverty line, and we've sort of depended on more on private, individual academics trying to do that using other data sets. And there's a lot of debate about what to do. And you, I think, touched upon one of those issues of how to sort of look at data using different data sets and marrying them. Some have used, say, the National Sample Survey, and then plug the gaps by using National Income Account data. Now, the question that I want to ask you is that, and the big question is whether India has continued to reduce poverty or not. One argument is that if India's unemployment levels are going up, and based on the leaked consumption expenditure survey, which was not formally accepted, it showed that consumption expenditure had fallen in line with the unemployment number going up. How do you sort of look at India's poverty trajectory? Your understanding on India's poverty trajectory, and what do you think needs to be done to address? I mean, for a country with so many more poor people, whichever way one looks at it, not to know how many poor are there, have a ballpark number is an odd thing. So how do you address it?
First of all, there are many problems in measuring poverty. Poverty conveys something, but it conveys different things to different people. When we used the consumption expenditure criterion for determining the number of people who are poor, this is from a common sense point of view. When you mention somebody as being poor, we mean that he has a level of income which will not give him a reasonable standard of living. Therefore, that is the rich versus the poor is the classification. Therefore, ideally speaking, we should have in India a survey on income. We don't have. Many people have suggested it, and I have also written on it, saying that can we do a survey on income? NCAR has done some work in this area, but a comprehensive income survey is not available. In our National Statistical Commission report, we told the CSO to look at this and initiate a survey. Therefore, in the absence of income data, we have only the consumption expenditure survey, because the reason primarily is people are not willing to give their level of income. But people are willing to give, if you say, are you consuming food, are you consuming this, that data are more easily available, or people are willing to give that data. Therefore, consumption expenditure survey, using that as a basis for measuring poverty, uh, has been done in the absence of income data. Okay. Now, the big question is, what is the cutoff limit? How much consumption expenditure defines what is who is a poor? Now, there have been a lot of arguments on that. I mean, I think this is also a very difficult area. Therefore, what we did, what we used to do was that, as far as food requirement is concerned, we will look at the calorie requirement. And from the calorie requirement, we will look at the basket of goods that will provide that. And from that, you decide what the food expenditure should be. Then what we did was that, given that food expenditure, you go to that category of expenditure groups where that level of expenditure, food expenditure, is satisfied, and take that group or that subset of expenditure as the needed consumption expenditure. Okay, this has been debated a number of times. Of course, we did something. We said that if we can do through calorie requirement what is the minimum required for food, can we look at some minimum requirement for non-food?
Yeah.
That's what we did in our report. And we took up three things, I think. I mean, transport, something, and two other items. And by some method, we determine the minimum expenditure required in order to be called, below which one would be called poor and above which one would be called rich. But I must say this has not taken off, in the sense that our report was given, but there was a change of government, and because that was 2014, I finished the report. That by the time I gave the report, there was a change of government, and nothing has happened after that.
Yeah.
So, but even if you go to the previous methods, there are some difficulties about it, because you estimate the criterion for who is poor, but then you can't be doing it every year as consumption expenditure survey. Therefore, you take it forward by using a price index in order to arrive at what it should be in the next year or the following year, until you do an expenditure survey later on. So this is what was happening. Actually, the Tendulkar report came to the conclusion that by 2011-12, that the poverty has come down to below 20%.
Yeah.
So that created a lot of controversy, and my committee was appointed. But we came to a conclusion that it is higher than that, about 30% or something like that. But the point, to go back to your main issues that you raised, in most countries in the world, it is really the expenditure survey, consumption expenditure survey, or income survey is used for measuring who is poor and who is not poor. Therefore, some normative number is arrived at, and that cutoff is used. But there are others who feel that this does not give a clear picture. That is what is called the multiple indicator approach, saying that you have 5 or 6 or even more items and figure out whether they satisfy or not. Therefore, the survey is conducted in terms of fulfillment of a certain set of requirements, whether it's a kacha house or a pakka house, or something like that. I mean, the list is there.
Yeah.
Then after this list is there, they go and collect the data. So it will be 1 or 0, because either he has a Paka house or a Kacha house. Similarly, the other things. And then they decide on how many criteria, how many items on which they have 0. And then they decide if it is more than 6, then the person is poor. This is the multiple indicator index, which Oxford had done. Now I think in India also we are doing. But those who criticize the consumer expenditure data method are really very soft on this multiple indicator thing. I have written in my report that the multiple indicator approach is not really a solution to the problem. But strangely enough, the Oxford study on multiple indicators, using multiple indicators, gives more or less the same result which the Tendulkar or my committee gives. There has been a substantial reduction in the poverty ratio during the period of what I mentioned earlier, the high growth period. 2004-5 to 2011-12, there was a substantial decline in the poverty. Therefore, the problem is that the consumption expenditure survey, which was done 5 years after the 2011-12, or a year later,
17-18.
Yeah, so it was dumped. I am told that the new expenditure survey is going on now. Therefore, we may have to wait for maybe another 6 or 7 months before that data would come.
Okay.
Then one can use that and compare it with the earlier survey, earlier results of the Tendulkar or mine, and then see what it would be.
Is that the only way to settle this debate now, or is there?
No, you see, what the people now are doing is, since that expenditure data are not available, let us use the multiple indicator index, because the National Family Health Survey and all that provides data on various indicators. So using those indicators, whether we can come to a conclusion. Therefore, this actually means two steps. What are the indicators you have to choose? Is it the Paka house, Kacha house, or whatever it is? And secondly, how many zeros you need to get in order to be classified as poor? So that, as if that this method obviates problems is not, in my opinion, correct. Yeah. It has its own problems. But in the absence of the consumer expenditure survey, one approach is, let us do it. After all, there are Millennium Development Goals. Okay. Then if these are the goals, and what was the achievement in 3 years ago, and what is it now, then this comparison can be used to indicate whether the achievement in the development goals can be a good indicator for finding out whether poverty has increased or decreased. My point that I have made in the book also is there is a high correlation between the rate of growth of the economy and the reduction in the poverty ratio. What has happened since 2011-12 is that the growth rate has declined. That 8 to 9% and all has not happened continuously. 1 or 2 years it might have happened, but it is not continuous. Therefore, the rate of growth of the economy would be much less than what happened in the high growth period. Therefore, the rate of decline in the poverty ratio must be much less than what it has been there. Because so long as income is growing, it must have some effect on poverty. I mean, you can't say that you have a national income data where you say that the rate of growth of the economy is X, but then say that the poverty ratio has increased. I mean, I think unless there is a highly skewed distribution of income. But my view is that the reduction in the poverty ratio. The rate at which it has been coming down must have been reduced now because the rate of growth has fallen. And that is why I go back to one point that I made even earlier, that if we really want this economy to grow, we must focus on growth. And I think growth, take it 7%. 7% real growth over the next 25 years, we can see substantial improvement.
Okay. One was the question on, I'll just rephrase it. Okay, the next big debate that we also see around the world is about printing money. There's a lot of this notion that, central banks can actually print money and governments can actually use that to get out of the many problems that the world, around the world we are seeing. And the argument being made is that if the money, if a government borrows in its own currency, then perhaps it can never sort of default. And it can just use that to fund many of the goals it may have, from alleviating poverty to increasing, the number of bridges that it can make. How do you sort of look at that? Because the other side is, which is saying that government must balance its books at least, in some broad ballpark way, that 3% of GDP or whatever should be the fiscal deficit. How do you sort of look at this debate about whole thing that print money and get on with it?
Now, we have had, fortunately, an experiment in this. Everybody talks about inflation today. What is the reason? It is not, in my opinion, the rise in the price of petroleum products, crude oil, or that. I have repeatedly written that the increase in the prices of individual commodities can only be triggers. They cannot be responsible for sustained inflation. Take, for example, a family. It has a fixed income. Assume that the income will not change. Then the price of one commodity goes up. What happens then? Less will be spent on other commodities. And therefore, the prices will come down. Therefore, this argument that crude oil prices have gone up, something else has gone up, and therefore inflation goes up is, in my opinion, not a valid one. Let's look at COVID-19. Everybody said in 2020-21 that the solution to the problem is that government must increase expenditure. Without exception, everybody had said it. Now, government must increase its expenditure at a time when its revenue was falling. This has happened not only in India, but UK, USA. USA is the worst because they gave a check to everybody in the country. Now, what happened as a result? The inflation that we are seeing today is essentially the result of this thing. It is not due to other factors. If you just increase the free doles, and that is supported by, not directly, but indirectly by the central bank, the net result will be an increase in inflation. So this is basically why. There are two, an added reason here, because at inflation time, at COVID time, when the doles were given and expenditures were increased, there is no possibility of increasing the production also, because there were restrictions on movement, there were restricted mobility of people, mobility of goods, mobility of services, all were affected. Therefore, you created the money, but it did not necessarily result in an increase in production. And that is the result which came to the result, there was the inflation. Therefore, the old argument, the sophisticated argument of the position that you are saying is that the printed money is going into activities which result in the increase in the production of goods and services. Therefore, the increased money has been matched by increased output. But this is only in theory. It doesn't happen always. And therefore, what you really end up with is inflation. Therefore, the whole idea that somehow that we can walk out of depression, or we can walk out of recession by simply printing money is not valid.
But if it was not a COVID time thing, then would that argument apply that you borrow more and then increase productive capacity?
But that doesn't happen. But it's an assumption that when you do it, it will happen.
Yeah.
First of all, there are lags between putting the money into an enterprise and getting the output. Then, secondly, it does not always result in the increase in production. This happened in India. I mean, I think quite this is or used to be called non-inflationary deficit financing. Non-inflationary deficit financing is theoretically valid. Or it can happen, but it does not always happen. And therefore, it depends upon the production system. So if I don't know, you were a Delhi School of Economics person. V.K.R. Rao wrote an article. How does the multiplier operate in a developing economy? He said the Keynesian idea that you inject a certain amount of expenditure, then by series, it will lead to a multiple expansion of income. But V.K.R. Rao argued that it assumes that there is unutilized capacity in the country, and therefore when you increase the demand, automatically output increases. That is not true. So he said that multiplier operates more in money terms rather than in real terms. Something like that has happened now also. But the point is this, that it is not as if that injecting a certain amount of expenditures financed even by the central bank is a totally bad idea. But that has to be consistent with the ability to produce the output. If that is not there, and then this can only result in increase in inflation.
Right. Very, very grateful for your time, sir. I have more questions, but I don't think I'll ever stop asking questions. And we've already crossed the 1 hour mark, I think. So let's bring it to close. Very grateful again for your time and for your insights. And I hope the viewers have enjoyed and understood the working principles of how many of these things happen. And if you understand that, then perhaps you can frame your views more appropriately. To the viewers, if you like the episode, please press like and subscribe to our channel, and we'll be back next week. Thank you.